What's going on, everybody? It's John here. I do videos on investing, on generating income online, on credit, and then you're going to see some more videos on adventure travel, and then also more videos on short-term rental content. Uh, Here we are. It's pretty much the beginning of June in Southern California, and it's the beginning of the busy rental season. So I'm going to start kind of picking up some content with respect to short-term rentals. It's been really mostly investing content, as of lately, and that's what we have today. Today we have actually what happened is after the bell, we've got Docusign that actually reported their earnings after the bell. So I wanted to go ahead and give you an update about Docusign and their earnings and take a look there. So Docusign is actually one of the few companies that I'm still excited about. Docusign. They haven't really, performed that well. I mean, the majority of growth technology has, certainly gotten hit really hard since the middle of February of 2021. So it's been like now over 3 months. April was pretty much good for everything. But growth technology certainly has gotten hit. That has been my sweet spot. I've invested in the Apple before the first iPhone came out in June of 2007, so a solid 14 years ago, and kind of have developed a real area of comfort within growth technology that has worked for me. Obviously, we're in a massive bull run, and the bull run has been going on since pretty much about '09. So a lot of people have done well, but at the same rate, I do have some really big wins. For example, my highest return is actually Netflix shares, which I purchased in 2011 and 2012, and have an 80x return on those. And then even Apple, the shares purchased in June of 2007 have a 33x return on those shares. And then also Amazon purchased back in 2014 when their stock was down almost $100 in one day. When that Amazon hit about 3,600 after hours, literally I guess about a month ago, it was about a 10x return. But in any case, so let's take a look at Docusign, because they reported some pretty good results and they're very interesting. They fit, certainly the mold of what I look for. It seems like their growth is pretty strong. I think it's pretty much kind of obvious to anybody that Docusign is going to be, a winner in the long run in terms of, just everything with respect to digital contracts. I use Docusign and HelloSign for all of my agreements that I do for my rentals, which I got 3 rentals here in Southern California that I do, and I use that for every single one of them. But let's go ahead and take a look and see where they're at with their numbers. So what do we have here? We've got Docusign up 5.5% after hours, reported some strong numbers. What we'll do is we're going to go over to here are their financials. We're going to go over to the investor relations area of Docusign. So we're going to take a look. Docusign total revenue was $469, an increase of 58% year-over-year revenue growth. That is year-over-year quarterly revenue growth, right? I actually typically, when I look and do my handy-dandy spreadsheet, which you're going to see in a second, I actually always take a look at full year revenues and how they're growing from a full year perspective. Subscription revenue was $451.9, an increase of 61% year over year. Professional services was and other revenue was $17 million, an increase of 7%. Billings were $527.4 million, an increase of 54% year over year. GAAP, you don't need to know about GAAP. Net cash provided by operations was $135 million compared to $59 million the same period last year. That's a big jump. Free cash flow was $123 million compared to $32 million in the same period last year. So if you take a look at it, so what I'll do is I'm going to take a look here into the spreadsheet here. I went ahead and took a look at their numbers, and I kind of like to stack them up in a peer group so you can kind of see, how they do compared to some other selections. So let's go ahead and do that. All right, so here we go. We got Docusign. So they're creeping up. If you take a look, these are the most recent 12-month revenues right here, column G, and then that's the gross profit, and then column J here is the 12 months prior. So they just cracked the $1 billion mark. So here they go. 1.4 billion is the most recent trailing 12 months. Ended, let's see, I believe it ended actually Yeah, 123. Yep. Or I'm sorry, 131.21. So for whatever reason, their fiscal year ends in the end of January, each year, as you can see. So they cracked a billion. So in the January 31st of 2020, they were just a tad under a billion. So that's a mark that I always look for, everybody, in terms of breaking through that $1 billion sales figure. That's something that I look for. I mean, when I invested in Netflix, they were at about 3 billion in revenue and about 3 billion in market cap. Kind of weird how it was the same figure, but obviously, if it goes up to 300 billion, it's going to be 100x return of mine of those shares that I've held on to. But yeah, so one thing that's super duper on Docusign is 76% gross profit margin. That's very attractive. I mean, that's one of the things that I like the most, and I think really any investor should like the most, on when investing in growth technology, because you really have that strong gross profits. I do believe gross profits are really, have a lot to do with the lifeblood of a company, and especially with growth technology, where these companies aren't even at a billion yet. If you can grab them before they're at a billion, and you have the confidence that they're going to grow, and they're a high conviction name for you, it's, I view it as a great opportunity. But the reality is that those companies usually don't always have actual income yet, right? They've got gross profits, and I always look out for that strong gross profits figure. And this is a little quotient, a little ratio I have here, which is really the annual gross profits divided into their market cap. So you figure 37, it's a little high. I mean, the market cap for Docusign is a little bit high. If you take a look at it, I think it's like 50 some billion or something like that. Let's take a look. Yeah, 37.9 billion is their market cap. So you figure, that level, 40 billion. I mean, are they going to go up to 400 billion? I don't know. I mean, Salesforce and Netflix aren't even close to 400 billion yet. So, maybe they will. So at this point, it is a little bit high, but still definitely, worthy of a look. I did invest in Docusign back in pretty much the fall of 2020 when I grabbed a bunch of groups that I really liked, which was Peloton, Docusign, PayPal, Tesla, Shopify, and Microsoft. I mean, I just kind of got back into Microsoft, but basically, of all those, Docusign actually has got, like in one of my brokerage accounts, about a 14% return from the fall, and then the other is about a -1. So Docusign's probably the second lowest performer. The worst performer is actually Peloton, because they've gotten all that bad news. But the top performers are pretty much Roku and PayPal in that bunch. Tesla was certainly up there. Actually, Tesla might be the top performer, because I picked that up in January of 2020, and even though it's been hit really bad, it's still pretty strong performer relative to January 2020. But basically, if you take a look, Docusign 37, Roblox at 59. Roblox is, definitely a high conviction name for me. They're getting a little expensive because they've been kind of going up quite a bit, and their market cap is going up there. But if you take a look at it, Roku, certainly like Roku, they're, the multiple on Docusign is a little lower than Roku, and a lot lower than Snapchat. Snapchat's gone up a lot, and then certainly a lot lower than Shopify. Shopify's been really a very strong performer, but with their gross profits relative to their market cap now is actually really big. So I think Docusign's a pretty attractive opportunity. It seems like it makes a whole lot more sense to have exposure to it than not. Not really sure how high flyer of it's it's going to be. I would say that Docusign is certainly a high conviction name. Certainly it's going to be. I would imagine it's more likely than not that it's going to be a winner in the long run. So there you go. So there is some info on the most recent Docusign earnings release. Just ticked over 1 billion in sales annually, cranking in at about 1.5 billion in sales. So it's off to the races. Here we are, basically about 38 billion in market cap. So you might want to grab that sucker before it hits 50, and then before it hits 100 billion. Might make more sense than not to do that. Hopefully you guys like that. If you like these updates, you can always go ahead and give me a like. That actually tells the YouTube that you like my video, and so that it shows more, and people can actually see these quarterly releases. You can also subscribe. It's 100% free to subscribe, 100% free to hit that like button, and 100% free to hit that alerts bell. That way, if you hit the alerts bell, I'm not doing crazy amounts of videos every single day, but I do focus on a lot of investments, and I do basically update my kind of basket of stocks quarterly and do updates on the quarterly earnings. So hopefully you like that, everybody. Everybody, I'm going to put some links below. I've got a blueprint I came out with where I cover credit, I cover investing, I cover generating income online, and basically it's at the end of this guide. I've got basically all the groups in the country that provide a free FICO score at all three bureaus: Experian, Equifax, and TransUnion. A lot of times you're going to have to go and you're going to have to pay for that FICO score. Certainly not at Experian, because you can get that free for at the app. But the reality is 90% of all lenders still make their lending decisions according to FICO. So you got to know what your FICO score is. You can't just go and get a free Vantage score from Credit Sesame or one of the tons and tons of apps that you can get a free credit score from. You got to get your free FICO. And then also I do have a lot of investing content in there. Like I said, I got an 80x return on my Netflix purchase back from 2011 and 2012. Got a 33x on Apple. I got almost a 10x on Amazon. So I've got a lot of investing content in there, and also I've got a deep background in it too. My first job out of college was Merrill Lynch. Then I did some investment banking, and then also worked at Sun America here in Los Angeles for 3 years. Everybody, I'm not a financial advisor. I'm not your financial advisor. This is actually just for entertainment and for some mild education. But hopefully you liked it. If you did, go ahead and leave a comment for me, and have a great week. Thank you.